In this video, I am going to share with you the latest updates on Keppel DC Reit's third quarter performance for 2024. Let's get into it. Hey friends, welcome back to the channel. I'm Iggy here, and I've been covering topics like stocks, finance, CPF, and everything related to growing your wealth. The investing Iguana is featured and ranked 8th in the 2023 Influential Tigers by Tiger Brokers, with over 800,000 reads. I've also covered over 500 videos and over 250,000 watch hours as of September 2024. Today, we're diving into Keppel DC Reit's latest financial report. Keppel DC Reit has just released its third quarter results for 2024, and there's a lot to unpack. Let's start with the headline numbers. The REIT reported a distribution per unit, DPU, of 2.501 cents for Q3 2024. This is a solid 6.1% increase compared to the previous quarter. It's always good to see growth in DPU, as it directly impacts the returns for unit holders. Now, let's look at what's driving this growth. Keppel DC Reit saw a continued strong reversion of over 40% in the third quarter. This marks the 7th consecutive quarter of positive reversions, which is impressive. A major contract renewal in Singapore during Q3 contributed significantly to this performance. The REIT's portfolio occupancy stands at a healthy 97.6%. This high occupancy rate is a good indicator of the demand for data center space. The portfolio also has a weighted average lease expiry, WALE, of 6.3 years by lettable area. This provides some stability to the REIT's income stream in the medium term. One of the notable events in the quarter was the completion of the acquisition of Tokyo Data Center 1 on July 31, 2024. This addition to the portfolio expands Keppel DC Reit's presence in the important Japanese market. Let's talk about the REIT's financial position. Keppel DC Reit maintains a strong balance sheet with an aggregate leverage of 39.7%. The average cost of debt stands at 3.3% for Q3 2024. These figures suggest that the REIT is in a good position to manage its debt and potentially take advantage of growth opportunities. The REIT's portfolio is well diversified across different contract types. Co-location contracts make up 67.2% of rental income, followed by fully fitted contracts at 21.5% and shell and core contracts at 11.3%. This mix provides a balance between different types of data center services. Geographically, Keppel DC Reit's assets under management are spread across Asia Pacific, 73.2%, and Europe, 26.8%. Singapore remains the largest market, accounting for 53.1% of the portfolio. This geographic spread helps to mitigate risks associated with any single market. The REIT's client base is also diverse, with a majority of rental income coming from clients with investment-grade or equivalent credit profiles. The top client, a Fortune Global 500 company in the Internet enterprise sector, contributes 42% of rental income. Looking at the broader market trends, the data center sector continues to experience significant growth globally. This is driven by increasing digital transformation and adoption of technologies, including generative AI. Demand from cloud service providers remains strong, underpinning co-location demand. In the Asia-Pacific region, operational capacity of data center markets has moved towards the 12 gigawatts mark, with 1.3 gigawatts of new capacity added in the first half of 2024. The top 6 markets, China, Japan, India, Australia, Singapore, and South Korea, contribute about 85% of the operational capacity in the region. In Europe, take-up in the major markets is expected to reach 440 megawatts this year, exceeding the new supply of 379 megawatts. This is likely to lead to a decrease in vacancy rates, potentially falling below 10% for the first time across the 5 largest markets. However, it's important to note that the sector faces challenges related to cost efficiencies, sustainability measures, and carbon footprint reduction. Stakeholders are addressing these issues through greater adoption of improved technology and expanding into larger build capacities. Keppel DC Reit is well positioned to capitalize on these trends. The REIT has potential data center assets for acquisitions worth over $2 billion through Keppel and Keppel's private data center funds. This provides a pipeline for future growth. In terms of sustainability, Keppel DC Reit has set several ESG targets. These include achieving a 50% reduction in Scope 1 and Scope 2 emissions by 2030 from 2019 levels, introducing renewable energy to at least 50% of colocation assets by 2030, and obtaining green certification for all colocation assets by 2030. To wrap up, Keppel DC REIT's Q3 2024 results show solid performance with growth in DPU, strong reversions, and high occupancy rates. The REIT's diversified portfolio and strong financial position provide a good foundation for future growth. The ongoing trends in the data center market, particularly the increasing demand driven by digital transformation and AI, bode well for the REIT's prospects. If you guys enjoyed this video, then you're going to love my video on is Keppel DC REIT really undervalued? Thinking face. In that video, we dive deep into the valuation metrics of Keppel DC REITs and explore whether it's currently trading at an attractive price. Check it out to gain more insights into this interesting REITs and make more informed investment decisions.